Hello and welcome to Rice YouTube channel. My name is Jabudh Shaha, and in today's editorial explain session, we will discuss an important topic from economy section of GS paper 3. The title of the article is The RBI and its Growing Fiscal Role, which appeared into today's Hindu newspaper, that is 18th of June, the Hindu newspaper. And from the same, we have pointed out all the important facts a aspirant must know and prepared a holistic article for you. The article will ensure that if a mains question ever appears in your mains paper, you are well equipped to answer that. So the next question would be, what can be the mains question from this article? The question can be like this: RBI's record surplus transfer reflects an evolving role of central banks beyond monetary management. Examine the factors responsible for the rise of RBI surplus and its implication for the Indian economy. 15 marks. So again, after this discussion of the article, I would hope and I'm pretty sure that if a question ever appears in the mains paper of your mains paper of UPSC, you will be well equipped to answer that. Okay, now let's get started. The very first, why this idea is in news. We will first see that why in news. It says RBI approved a record surplus transfer of 2.87 lakh crores to the union government for the financial year 25-26 under the economic capital framework, which reigniting the debate on central bank's independence, fiscal federalism, and RBI's expanding fiscal role. Mind it, fiscal role. RBI have monetary role, but fiscal role is with the government. We will see all these idea in detailed way into the topic. Once the context is done, why in news, let's see the core idea upon which we are going to see the article, or the idea which can be laymanly known as introduction. It is under traditionally RBI's role is to maintain monetary and financial stability. However, rising surplus transfers indicate that RBI is becoming an important source of fiscal capacity of the government. Now, think about it. An independent bank making a government somewhere dependent for the fund, is it going with the notion of a democratic or a sound country, fiscal sound country? That is what we will see in the upcoming topic, upcoming session, the same session only, the upcoming ideas. So the introduction somewhere sets the idea that we are going to discuss the core idea of RBI surplus and whether this transfer of surplus is well fitted to the new notions of economy or not. So before deriving or before jumping onto any conclusion whether this is right or wrong, let's just somewhere brush up what is RBI surplus. So RBI earns income from multiple sources like investment from the government securities. It does invest, the return it gets from its security. It somewhere maintains the foreign currency, and some from that appreciation in that it earns foreign currency asset, as well as it somewhere have commission or reserve for forex, from which it also earns from forex transaction. It also have a liquidity management operation placed for all the banks in the country. So any transaction within that framework let makes RBI earn some money or surplus or profit. Profit is not the accurate word, surplus would be the, and the last would be the appreciation of gold and reserved assets which are kept or purchased by RBI, which appreciates with time. From that, after maintaining a risk buffer, keep in mind the risk buffer. How does the risk buffer is calculated? We will see in the next heading. And contingency reserve, the remaining profit is transferred to government as RBI's dividend surplus. Now tell me, This idea of keeping a risk buffer or contingency reserve, is it without any proper framework? No, the answer is no. We have a economic capital framework in place as recommended under the Honorable Bimal Jalan committee. Its purpose was to somewhere ensure that the buffer or reserve which is kept by RBI has a proper norm and taken into consideration all the economic situation all over the country, not only in India. So RBI determines risk buffer, which the committee ensured through this economic capital framework. It somewhere also decide the surplus transferable to the government and the balance financial stability with the fiscal need of the government of the day. Now, once we have seen the idea of RBI surplus, let's now see why is it RBI's role in fiscal part is expanding day by day. First, if we go traditionally, we would see government finances were done through three processes. First was taxation, next was borrowing, and through economic growth, again, government used to get the ripple effect of the economic growth. But now we see RBI's transfers as the fourth source. How? This transfers ensured that there is no new tax in place, there is no new additional borrowings in place. At the same point of time, it does not have any immediate increase in economic output or effect as previously for the two. If we increase the taxes in the economy, we see less amount of disposable income, and borrowing somewhere creates an inflationary effect in the market. Borrowing or borrowing done from, keeping in mind borrowing done from the country only, somewhere have an inflationary effect in the market. Therefore, it does not create any immediate increase in the economic output, whereas at the same point of time it creates fiscal space for the government expenditure to put on. Next, why has RBI surplus increased? Though I have mentioned, but you can get a fair idea from these points only, from where the RBI have surplus. If there is more income in place or surplus in place from all those assets which I have categorically mentioned, which will automatically result that only those asset is giving RBI more increase in the amount or the increased surplus. So first would be the higher forex reserve earning. Recently, because of interest income, valuation gains, and return on foreign security has ensured that RBI surplus has increased. Active forex management, even currency market intervention by RBI and reserve operation done by the RBI somewhere ensures that its surplus gets increased. It somewhere ensured there is reserve balancing, where to maintain the market it purchased or sales, mostly sales, through sales it generates income or surplus. Sales or increased foreign assets holding somewhere manage this surplus. Higher global interest rate, as RBI also invest into multiple assets which are kept with other banks. If they give more income or more result or output, automatically RBI gets a better return. And last would be the expansion of RBI's balance sheet, where the balance sheet reached nearly 92 lakh crores and higher income generated capacity. We know the bigger you have balance sheet or you have access to money, it will somewhere again attract more money. So the growing size of RBI's balance sheet ensures that there is a ripple effect on the income or the surplus of RBI. Now, what does this income or increased surplus signifies? So significance, first we will read under economy. It strengthens the government finances, it reduces the borrowing pressure of the government, and somewhere supports the fiscal stability. In terms of monetary, it portrays the efficiency of the reserve which are maintained by RBI. reserve management. It somewhere demonstrates the strength of RBI's balance sheet. And in terms of macroeconomic, if we go to through stakeholders approach, macroeconomy, it ensures there is easiest pressure on the bond market, as again government is not borrowing from the market. It supports lower interest rate, not borrowing inflationary effect, less inflationary effect, and encourage the private participation also, creating a crowding out effect. Now, if we see after significance, if we see what are the challenges that this kind of transfer may lead to, are listed down. The first, the major point is somewhere violates or dilutes the independence of the central bank. Growing dependence or RBI profit may create a pressure on larger transfers. It's somewhere fiscalization of RBI, as we see this process somewhere was earlier also invoked through section 7. So we get to see the main idea or the main responsibility of the RBI is to ensure inflation and support the monetary policy. But now also we see, now we get to see there is fiscalization of RBI, where monetary operation increasingly influenced by the fiscal outcomes. Fiscal federalism, RBI surplus is non-tax revenue and outside to divisible pool, and state get no share, therefore a fiscal problem. Next, fiscal concentration also we get to see, where combined effect of RBI's transfer, cess, surcharge and borrowing restrictions strengthens the state fiscal dominance over the states, the central fiscal dominance over the state. And at last, it somewhere reduces the shock absorbing capacity of the RBI. As we have already seen in the significance part, the more amount you have with you, it attracts more money. Somewhere diluting or transferring that surplus somewhere negates the idea of a buffer stock, where large transfers may weaken RBI's ability to handle future crises and external shocks. Now, moving on to the way forward, few way forwards which are listed here are: preserves RBI independence. It should always ensure, even when it is transferring, it should be willingness and under the ECF management. The same second point is the follow-up of the first point. Follow the economic framework strictly. Improve transparency in reserve management also, so that adequate reserve are being kept for uncertain circumstances in future. Maintain a adequate contingency buffer, as I was speaking of. Address the fiscal federalism concern also, include some part of it into the divisible pool, so that the ripple effects are also created by the states. And at last, focus on sustainable fiscal consolidation through tax buoyancy and growth, and not depending only on RBI. Because more tax buoyancy, investing 1 rupee, if it has more effect on trans buoyancy, will also ensure that there is growth in place. Now, once the way forward is done, let's now briefly see the conclusion. The conclusion says, a strong economy requires both a fiscal responsible government and an independent central bank in place. Balancing fiscal support with RBI's autonomy is essential for long-running macroeconomic stability, and also keeping in mind the cooperative federalism. With this, I would conclude today's session, and I hope that in future, if this kind of question ever appear, you are, after watching this session, are well equipped to answer this question. With that note, I would also request you all to like this video if you indeed think that this video was helpful for your preparation. And at last, I would also let you know, whoever is wondering among you then where to get this PDF from, the PDF is available in RISE IS website in absolutely free, without no hidden charges. With that, I would again thank you all for joining the session. Keep preparing.